This is Total Growth Investing, where price growth is not enough. Dividend growth is not enough. We want to identify stocks, funds, and other investments that perform well in both of these measurements, because when we find them and buy them, we can beat the market over the long term. Just to get this out of the way, I am not a financial advisor. I am posting this video for entertainment and educational purposes, and the opinions expressed are my own. I don't have a position in Thermo right now, but I plan to as soon as the healthcare sector drops below 10% of my portfolio. I'm also not monetized on this channel in any way, shape, or form, and I have no business relationship with any of the companies involved. Right now, Thermo Fisher Scientific is ranked number 6 on my Total Growth Investing ranked watch list. This is a company that Seeking Alpha and many other financial websites categorize as being in the healthcare sector, in the life sciences, tools, and services industries. But what I found when trying to research this company is that appearances can be deceiving. Let me start by scrolling through the 39 pages at the end of their 2021 annual report that shows just how many subsidiaries they have. They have companies all over the world, hundreds of them. Some of these that they have started, many they have acquired, others are sibling companies handling similar business in specific parts of the world. The Seeking Alpha description tries to break down some of the major things they do, and when I first looked at it, I was afraid that I had bitten off more than I could chew. There's almost no way for me to do any kind of comprehensive review video on this corporation. It's just too big. History-wise, the current corporation was a result of a merger in 2006, bringing together Thermo Electron Corporation and Fisher Scientific International. Thermo Electron was incorporated in 1956 and was considered a world leader in analytical instrumentation. Thermo Electron completed its initial public offering in 1967 and was listed on the New York Stock Exchange in 1980. Fisher Scientific Company was founded in 1902 and incorporated in 1991 on the New York Stock Exchange. Fisher Scientific was, still is, a manufacturer and supplier of products and services to the scientific research and clinical laboratory markets. These two fit very well together. The mergers, acquisitions, and divestments of both of these companies were widespread and global. Even before the merger, Fisher had a global supply chain covering over 150 countries. Almost every avenue of investigation that I tried for this company led me down a rabbit hole that I could not escape from. As much as I enjoy science, their annual reports were just too detailed for me. They have a YouTube channel full of videos talking about their products, services, employees, culture, and their customers. I had a CT scan in mid-April, and I actually started asking if the lab had any equipment from Thermo. The nurse wasn't aware of any, but offered to put me in touch with their supply chief. I decided I didn't want to go down that path. Here is a chart of Thermo Fisher's revenue, expenses, and net income. The last few years during COVID have been very good for businesses that focus on supplying scientific research lab with goods and services. And the incredible success that we saw from Pfizer, Moderna, and Johnson & Johnson was just the tip of the iceberg of investigations focused on a specific problem that the world was facing. The other huge scientific investigations into biochemistry, the immune system, diseases, DNA, and hundreds of others are drawing more and more capital into a larger and larger list of companies, laboratories, and universities. This next chart shows their assets and obligations. The strength of the company is reflected in the difference between these two, and that difference has been growing. Thermo currently employs 130,000 people around the world after a huge spike in 2021. One of the resources that I can look at to see this network is CSI Market, a market research website out of Coral Springs, Florida. This website is amazingly rich with information about hundreds of companies. For Thermo Fisher Scientific, you can pull up a list of their suppliers, their competitors, and their customers. And it's interesting to see the same company names on all three of these lists. Businesses buy and sell from each other, and the number of companies in this network is an indication that the network is very strong. Thermo is one of the larger players in this network. CSI Market shows 88 suppliers, all of which are actually smaller than Thermo itself is. This means that this is a source for acquisitions if Thermo decides that they want to focus more on a particular supply chain. CSI also shows 49 competitors, only 3 of which are larger. It's also important to note that because of the wide range of products and services that Thermo provides, very few of their competition, if any, have the ability to compete across all of those sectors and industries. The list of customers is really long, 360 on the CSI list, and a full 15 of these are larger in market cap than Thermo is, but none are significantly larger. The largest is Taiwan Semiconductor, with a market cap of $484 billion. These 15 are mostly all focused on a particular industry and sector, giving security for Thermo to be able to provide products and services and lowering the chance that any of them would attempt to swallow them. Based on what I'm seeing, I believe that Thermo is secure in their place in the global network of supply chains, and likely will be for a very long time. Let's look at why Thermo jumped to the top of my ranking list, starting with dividend growth. They started paying a dividend in 2012, 6 years after the merger. They mostly kept it flat until 2018, then started an annual raise from 15 cents, 17, 19, 22, 26, and then 30 cents per quarter. Their average compound annual growth rate over that time is 6.34%, and analysts expect that to continue over the next 3 years. Another important aspect is their payout ratio, which currently sits at 5.87%. That gives them plenty of room to grow the dividend while keeping the vast majority of their capital being reinvested into growth and expansion. Over those 10 years, the growth in their stock price has consistently been higher than the S&P. And on a good green day, their 10-year total return exceeds 1,000%. Right now, it sits at 922.56. What do the experts say will happen over the next few years? Looking at average expectations for earnings per share and cash flow on dividendstocks.cash, it looks like the company is coming off a high point, but will regain those levels in a year or so, and then go up from there. We don't have a crystal ball. Predictions are just based on market data. This video was a bit shorter than normal. I hadn't started looking into Thermo when I updated the rankings last month at the ends of the Kinsale video, and I didn't realize how big of a company it was. I could research this stock for months and not even scratch the surface. And I also needed to deal with some things at home. Please let me know what you think about Thermo Fisher Scientific in the comments. Thanks for watching. If you liked this video, please hit the like button and subscribe to the channel. I update my ranking scores a bit every day, and I run the numbers to find the top 10 after each video that I do. Here's the latest update. Thermo Fisher remained at number 5, but a lot of other stocks moved around. The new number 2 on the list is Devon Energy Corporation, which is a company in the energy sector, oil and gas exploration industry, that was just added to the list over the course of this month. Time to learn about this company so I can present it in my next video review. I'll be doing that research over the next few weeks. Along with this YouTube channel, please also like the Facebook page, and if you'd like to talk about the TGI ranking system and the stocks at the top, please feel free to join the Facebook group. I do these videos for fun, not profit. The profit comes from making good choices in investing and watching the returns roll in. Let's beat the market.